South Korea is reconsidering its plan to impose a crypto tax after a national petition gathered enough signatures to force lawmakers into formal review. The petition, which crossed the 50,000 signature threshold in just 8 days, now sits above 52,000 and has triggered the Finance and Economic Planning Committee to evaluate objections to the proposed framework. The tax, originally scheduled to take effect in 2021, has been repeatedly delayed due to industry pushback and concerns about its impact on investors. It is now set to begin in January 2027, but the petition's success has added renewed pressure on policymakers to reconsider the plan. The petition argues that the 22% tax on crypto investment gains is unfair compared to the treatment of other asset classes, particularly stocks. Stock investors in South Korea face capital gains tax only on profits exceeding 50 million won, a threshold significantly higher than what crypto investors would encounter. This disparity is seen as a key reason why the crypto tax could weaken Korea's position in the global crypto market. The petition's authors suggest that the current framework could drive investors away, especially given the declining value of crypto assets held by South Koreans. Data shows that the total value of crypto held by South Koreans dropped from about 121.8 trillion won in January 2025 to 60.6 trillion won by February 2026. Daily. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Trading volumes on the country's 5 largest exchanges also fell from $11.6 billion in December 2025, further highlighting the weakening market. The decline in activity adds to the argument that the tax could be a major obstacle to investor confidence and market growth. The Finance and Economic Planning Committee now has the responsibility to assess the petition's objections and decide whether to formally address the tax proposal. While the government has not yet announced a final decision, the growing public and industry resistance suggests that any tax reform will need to account for the concerns raised by the petition. The next signal to watch is whether the committee will propose changes to the tax framework or maintain the current plan. If the tax is scrapped or revised, it could signal a shift in how South Korea views crypto as an asset class and influence future regulatory approaches in the region. The petition's rapid success highlights the strength of public sentiment and the potential for policy to be shaped by direct citizen action. The mechanism behind the petition is part of South Korea's e-petition system, which allows citizens to formally request government review of proposed policies if they gather enough signatures. This system gives ordinary citizens a direct line into policymaking, especially on issues that affect them personally. The stakes are high for both investors and the government. For investors, the tax could significantly reduce returns and discourage participation in crypto markets. For the government, the challenge is balancing revenue needs with maintaining a competitive and stable financial environment. If the tax is implemented as planned, it could lead to a brain drain of talent and capital to more crypto-friendly jurisdictions. On the other hand, if the tax is scrapped or revised, it could signal a more investor-friendly stance and help South Korea remain competitive in the global crypto market. The next signal to watch is whether the Finance and Economic Planning Committee will propose changes to the tax framework or maintain the current plan. If the committee recommends, most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. A revision, it could include measures like adjusting the tax rate, introducing a higher threshold for taxation, or exempting certain types of crypto activity. These changes could help address concerns about fairness while still allowing the government to collect some revenue from the sector. The outcome of this process will have important implications not only for South Korea, but also for other countries considering similar policies. It could influence how governments around the world approach crypto taxation and whether they choose to treat digital assets differently from traditional financial instruments. For now, the debate continues, with the petition serving as a powerful reminder of the influence public opinion can have on financial policy.